I know that you decided to pop in to watch this new Blockrevision transmission merely out of the blockchain technology reasons. But I may surprise you. You weren't the first. Alright. So that's why we wanted to mention that focusing merely on the profiting reasons on cash and the valuations of particular assets might be too little to stay for longer in the game and not be paved away. Alright, so today we'll discuss over the background behind the recent price action of Bitcoin, what it may bring to the future. Can we expect a Minsky moment for this medium short term time horizon for the price momentum, and what we can expect out of the Fed tomorrow? That are the most important topic for today. I'm very glad you decided to pop in today, and let's kick off. And the first block is the economy view. Let's head on to what's up there. So the question is, won't there be more illiquidity as Fed is starting first elements that may be pointing to possible transition from quantitative tightening that may have last by 2024, and right now is touching a first quantitative easing signs. So maybe if we just assume that they are pumping up this banking sector, it may spread over to other sectors as well if they may start cracking, as they've already rolled the dice, and that means that even indirectly, when Fed is supporting the economy by just I would say injecting some cash into the banking sector, it may influence the whole economy, and also that may have reverberations on stocks valuation in the medium and longer time horizon. So as we can find right here, JP Morgan expects that Fed loans will provide up to 2 trillion of liquidity, and the usage of the Fed's bank term funding program is likely to be big. That's what they say. While the largest banks are unlikely to tout the program, the maximum usage envisaged for the facility is close to $2 trillion. And also, I wanted to mention that one of the things that given us a reason to ponder is this divergence between Fed and ECB. So when Fed is pumping up cash into the system, ECB is literally drowning and trying to suck up liquidity just to stay resilient. So it means that Fed is alike the one of the supporter of the Europe that right now is heading throughout a real turmoil in a banking system. So so as you can find right here, this divergence may bring over some elements that that may point to that ECB may eventually start pivoting when this inflation will be will get tackled. But for now, even though we may have this very strong support by Fed towards the banking system in the future, elements that nagging the economy of US maybe headwind for the whole system. So inflation is the one to tame at first, but at the second comes nation's bank sector that right now is falling apart in this way or another. So what about the trajectory to the future? So right here you may find that Fed watch tool for the projections towards a future, pointing that by end of a year we may end up at just 4% of interest rate, and as always along this lowering tendency of interest rate trajectory, we have a outstanding correlation this with a recession that may coincide with such process, and that's what happened before. Every time when we had these elements of the elements of lowering interest rates, we had some turmoil in the economy. It doesn't literally mean that the markets will drop right then, but it means that economy might be in a much more tougher situation, and eventually it may lead to a much bigger layoffs that we were going through this year already. All right, so let's head on to next element, and that will be a market outlook. So let's find out what's going on with the most important indices. So I will just send you to SPX, and we are right after market open, and that's the scenario that has been filled out. That's what I mentioned, and that SPX, after this floor building up at this shelf right here, right now is heading towards a 40 hundreds once again. So we are slightly touching this barrier of 40 hundreds, and right after a little stoppage right at above 40ish level, I would expect this one to move to this short medium term span on the narration of Fed slowing down its quantitative tightening. That's what in the second half of 2022 has shaken the market. So right now the markets is betting for loosening policy, and the Fed, tomorrow's Fed meeting might be the one to eventually validate or reject those premises. So that's about SPX right now. Let's find out what about crypto. So in terms of crypto, recently we've seen that Bitcoin has been rising on the voices of this falling apart economy, and if we just banking economy. If we right now may find out BTC, USDT, it's still in a growing and rising mode. So we have a very important barrier to tackle right at 30,000 right here. So it may stop us from stop us from that dynamic rally, but I do expect that Bitcoin won't get any lower than 26.7 in the nearest future, and the possible shelf from which we may rebound after this this rally will be the one at located at 27 hundreds 27 sorry 27,000. So I do expect this trajectory to play out, and right after a rally toward a 34,000, where the more supply ahead will come out, and possibly will try to dampen this recent possible future price action. So BTC USDT for April, for the rest of March and for April, is with a little consolidation and with a rally upwards. So we still have right from the shelf I pointed around 22 to 25% left for rally. However, for the overcoming of that level, it would take us a bit more time than just 1 month. Then another rally forward I would expect rather to play out somewhere in the second half of the year. So that was about BTC USD, but right now let's talk a little about the background. So Bitcoin has rose publicly while this swears with banks, and the concept of Bitcoin first came into creation in 2008 as a response to the great financial crisis and the financial world's reliance on banks. So recently we've seen that regulators have been very severe for the whole blockchain, and we can find it right after recent problems with banks. Those previously well functioning financial platforms right now becoming a central points of failure, and regulators should have been focused right now more on the centralized and opaque points of failure looming in the traditional banking system than in a blockchain one that the mechanisms inside are transparent and easy to comprehend. So that's what is to appeal about it right here. But can Bitcoin thrive when banking crises fade? So it's not that easy. So the whole banking system is based upon I would say fraud, as it's more like a Ponzi scheme, when all of this fractional reserve mechanisms is based on the eventuality where there is more users of a bank than those that are willing to withdraw, and when this withdrawal wave is substantially higher than the first one group, the banks are starting to fall apart, and that's why the Bitcoin might be the right alternative for such headwinds. So that was the crypto, and right now let's head on to market movers. So as you do know, that's as usually we are starting over with economic calendar. So right here you can find for today what we have today. It's ZTW. Oh, I need to reload. So we had ZTW Economic Sentiment Index. it lowered after this banking crisis, and after the DAX, German DAX, has plunged. Right, that day we had inflation rate, core inflation rate out of the Canada that has risen a bit. So it means we are reverting that. No, it's for yes, it's still keeping a lowering trajectory. So it's positive for the markets and economy as a whole. And on Wednesday, we however have this FOMC economic projections alongside with interest rate decision, and on Thursday we have Bank of England. This decision been around as well. In terms of earnings calendar, let's find out quickly what's up right here. So in terms of Tuesday, we still are waiting for the Nike to deliver. However, on Monday we had PDD Holdings that surprised to the downside, and Telecom Argentina State that also was the one of a laggard. So right now we are heading to trade idea, and as I've mentioned, for the Bitcoin, I will be consequent, and right now we'll try to find the possible option for short if that may come to this. So for BTC USDT, I do expect that tomorrow's event of Fed will be one of that may push the that asset up to somewhere in this 30,000 vicinity right after, with this acceleration, this volume spiking up, we may have a possible reversal, and that's where somewhere I would expect that reversal and this eventuality of a catching of 7% may come up. So that's where I do expect the price will stop, and you may try to scalp the market for such move. And in terms of short position, that would look like this one. So it's at so risk reward ratio is at 224. It's not very large. That's why I do recommend to set the smallest possible stop loss you available to take in order to increase your odds of a winning that bet. You may even increase it up to 2.83 in my view. So a possible it may even get to somewhere around the lower shadow at 26.8 26.8 thousand. So I do expect that such a bet is the one worth taking. But as always, remember about shorting, that shorting such a high, I would say, thriving asset is somewhat risky, and is the one that is strictly reserved for those that are feeling nice in shorting. Otherwise, I wouldn't expect this proposition for everyone. And as always, remember about setting stop losses and or alerts that may prompt you to close the position if that won't go in your expected way. So for that episode, that's everything. If you have any questions, just put it in the comment section and below the video. And if you've enjoyed, you may hit this like button. Thank you very much for today, and see you tomorrow, 8:45 a.m. the time. Today we had some technical issues, but tomorrow everything should work fine.